So let's talk about the two keys on how to day trade while on your lunch break. Now, these specifically is going to show you the two methods of how to earn more money with less effort. Because I'd imagine anyone listening to this video, maybe you're working a full-time job or you're working a large amount of hours and you just don't have the time to really come home, hypothetically at 1 p.m. to make some decent trades. If that's the case, or maybe 2 p.m., 3 p.m., whatever it is, if that's you, then I just want to let you know there is an easier way and you don't need to have, let's say, 6 hours of availability to trade. You just need this one. So let's talk about it. Now, key number one, I would imagine most of you are asking yourself the question of, okay, that's great. I'm very busy, but still, I mean, man, like, what if I can't actually trade today? What if there's one day I can't trade? That's the case, we need to discuss and talk about the rule of 3 versus 10. Now, the rule of 3 versus 10 that I've came up with is basically the essence of saying that it's okay to trade a max of 3 times a week versus a max of 10 times a week in the first place. The people that trade 10 times a week, for the most part, are the ones that have way more losses than wins because it's harder from a probability perspective to be correct 10 times than it is to be correct 3 times. So for all of y'all listening here, the fact that you are very busy or have a full-time job in the first place puts you on the side of potentially making 3 trades a max per week, and that would push you over to potentially being able to be consistent as long as you can find the time to do so. You just have to learn how the strategy works, and you're so restricted on your time wise that it's easier to make and be picky with trades, so you'll get higher quality trades because you have to make do with what you have. So that's the rule of 3 versus 10. Now, the second component we need to discuss is why consistent profitability is not a compound word. Now, consistent, you may be thinking, obviously, it's not a compound word. It's literally two words next to each other, Maurice. But think about it. If you're trading, in order to be consistent, that for the most part is completely separate than being profitable. In order to be profitable, that's completely separate than being consistent. So let's talk about it. If you are profitable can technically just mean that maybe you made one huge trade and then that's basically it. But that doesn't mean you're consistent. I would imagine what everyone wants to be is consistent. You don't want to just be profitable for a short amount of time. You want the compound word, you want it to basically be one or the other. So first things first, in order to get the rule of 3 to be you need to be consistent, right? So within 1 week's time frame, you need to say, okay, can I make 3 trades and be correct from a directional perspective to be able to make money? Or in other words, if you're trading, especially in my strategy, the question is, can you be right for maybe, let's say, 2 to 5 candles from a direction perspective and sell at your take profit area and actually be, consistently do that? If so, as a byproduct, you will be profitable. But what most people get wrong is they're trying to be profitable first before they get consistent. That's where the FOMO comes in because they're trying to be profitable. That's where the chasing comes in because they're trying to be profitable. Screw that. I'm telling you, get much smaller trades and smaller quantity of trades in the market by being consistent because you're so picky. And as a result, you will, as a byproduct, be profitable in the first place. These are not, they don't happen at the exact same time necessarily. Profitability is a byproduct of being consistent. So this is key number one, just to understand from a psychological perspective. Now, key number two, we kind of dig a little deeper on some of this from a chart analysis perspective, is you need to understand that every lunch hour has at least one quality trade. So whether you're trying to trade physically at your job, so you physically drive to work in your car, your vehicle to work, maybe you want to trade, but you work from home, or maybe you want to trade but you're retired. They all have the exact same answer. It's you could still have one quality trade during that lunch period of that 1 hour time period to be able to trade and make one trade. Now, if you're physically at your job, cool. I mean, realistically, all you can do is bring a laptop to work, and you can either trade in the break room or you could trade in your car. But those two things, those are the basically that should not stop you from being able to be consistent in the first place as a trader, especially not from being profitable as a trader, as that byproduct that we mentioned earlier. I have numerous students in my one-on-one coaching program that do that, and that's perfectly fine. A lot of them, and even myself, I did that as well. So I know you're thinking, okay, well, one quality trade, hypothetically, but I'd much rather see proof. Okay, great. Then let me show you actually proof that that is possible. So let's go to this. Maximize sell. This is my Thinkorswim platform, and these are the past 5 days. So what is this? Friday here, all the way back to Monday. And between these blue lines is the lunch period, which is 12 to 1 p.m. CST, because I'm in CST time zone, to actually show you that there's trades during these time frames. So I'm not going to go too into detail on any of this, but just to really show you as an example, if you're familiar with my strategy at all, you know that, hey, this is a zone. It literally can't, and that's the highest point of the day, by the way. So this is a zone, came down, broke through, cool, lunchtime now, came down, bounce up for a play. Came down, bounce up for a play. And if the only, of course, even if you stayed a little longer, cool, it kept going. It never broke below the zone for a full body of the candle at all. It actually bounced up. And I know you may be thinking, okay, great. It looks like it's pretty choppy. No, not at all. Let me actually zoom in for you, just on this one as an example. So let's maximize sell, pull that out, and pull in here, and actually look at it as the chart would be in the first place. There we go. So here's that exact trade, right? It went up, came down, got choppy here, but cool, bounced up pretty nicely. Bam. Came down, attempted bounce, came down, still bounce, boom, up. There's technically two trades here, whether it be this one right over here and this one over here. And that's perfectly fine. So that's that. But let's go to the 5-minute chart for the other days, because I'm sure a lot of you may be thinking, okay, that's one day out of this entire week, but there's no way it continuously could work. So let's check it out. This is the next day. This is literally the highest point of the day on this entire chart before the blue line. So being lunchtime, came around finally during lunchtime, bam, tapped it and ran down over to this piece. Boom. Profit for an option put. All right, great. I could probably just zoom it out. Let's go to the third day. This is Wednesday. Maximize sell. Highest point of the day. Came down. Came to this zone, by the way, but I'll ignore that for now, even though that's another perfect trade. Came up, pretty close to tap it. Bam, falls down. And hypothetically, maybe you waited, even maybe you didn't feel comfortable with this. Maybe we didn't address this. Maybe you didn't feel comfortable with this, but you said, I have a few more minutes. I'm a little late. Boom, tap it, run down. It's technically 3 plays within an hour, 10 minutes. So that's that. Let's go to the next day. This one is Thursday over here. For Thursday, there was a zone on this side. And again, this is a 5-minute chart, by the way. Zone on this side, the lowest point of the day before the blue line came over. Lunchtime happened. Boom, taps it, rushes upward. Literally. And I know you may be looking at this visually thinking, okay, these plays are not necessarily very large from a visual perspective. Murray says it's probably crap plays of like, what, 0.05%? No, I'm telling you, if you look at these plays, especially on the 1-minute chart, you buy same day expiration contracts. These are between 5, depending on the trade you're looking at, between 5 and 15% gains. Someone took this trade that you're literally looking at here on the 1-minute chart, buying somewhere in here and selling somewhere up here in this area, and that was the 15% gain. Literally, you're looking at it as small. When I'm telling you, the market only typically people get really less than 7% gains, and this is 15%, and I'm telling you, it's so easy to spot. But that was Thursday. So let's check out Friday. I remember Friday was kind of the only one that was a little sketchy. So this is Friday here. There was a zone intraday currently over here because you see there's no like high of the day, low of the day that was respective to this area. So during lunchtime, you basically had to draw your own zone within this lunchtime area. So zone here came up, tap, bam, upward. But that's one that's wasn't exactly the same as the other ones, but that's also perfectly fine. Again, think about it. Out of all the trades that you just saw, could you at least potentially nail 3 out of those, out of maybe 5, let alone the 10 potentially throughout the entire day, because it's way more than 10. So can you just nail one of them? That's the real question if we go back to all of this. So to go back to this, the 2 keys of how to day trade while on your lunch break is 1, Just focus on being consistent, and the profitability will come by you following the rule of 3 versus 10. And key number 2 is understanding that, hey, no matter what time of the day, no matter what day it is from a lunchtime perspective, there's always one quality trade. And as long as you have the time to be in front of a laptop, you can and you will have the time to be able to do it. And I guarantee that's the case because students all the time in my one-on-one coaching program, where a lot of them earn 70% consistent profitability from a win ratio perspective, do it all the time.